Good morning, good afternoon, and good evening, and welcome to today's webinar on the 2024 update of the China's Global Energy Finance Database, hosted by the Global China Initiative of the Boston University Global Development Policy Center, or GDP Center for short. The GDP Center is a university-wide research center that works to advance policy-oriented research for financial stability, human well-being, and environmental sustainability across the globe. My name is Rebecca Ray, Senior Academic Researcher at the GDP Center. The China's Global Energy Finance Database and its 2024 update shows a cautious return to energy lending for China's two main development finance institutions, the China Development Bank and the Export-Import Bank of China. To discuss these findings and their implications, today I'm joined by my colleagues, Diego Moro and Jiaqi Liu. Diego Moro is the data analyst for the Global China Initiative and the team lead for the Data Analysis for Transparency and Accountability, or DATA, workstream. Jiaqi Liu is a senior academic researcher and the team lead for the Energy and Climate workstream. I'll ask Jiaqi and Diego for a brief overview of the database updates and its findings, and then shift into an informal conversation with them, and finally, open the conversation to questions from the audience. Even though we'll take those questions at the end of the webinar, please feel free to submit any questions you have at any time using the Q&A box in your Zoom menu, which for most of us is at the bottom of your screen. When you add a question, please also include your name and your affiliation so our panelists know who they're addressing. As a reminder, this webinar is being live streamed and will be available for viewing immediately on YouTube. Jiaqi and Diego, please take it away.
Thank you. Thank you so much, Becky, and thank you for the introduction. And hi, good morning, good evening, good afternoon for our online audience. So here today, I will share, first of all, I will share my screen about the our slides. Great. So today our presentation title is Small Belt and Built for Role, Chinese Energy Overseas Finance. So first of all, Diego will go over the trends in Chinese overseas finance and talk about the data methodology and the 2023 updates. Then it will switch back to me. I will talk about key drivers and motivations behind the cautious returns and talk about some policy implications. So now I will pass it to Diego.
Yes, thank you so much, Jiaqi and Becky for the introduction. So I would like to first walk us through the trends in the Chinese overseas energy finance that we've observed in this new China Global Energy Finance Database update. I do want to, before diving into this picture here, just briefly explain a little bit more about our database. So at the Global Development Policy Center, we host a variety of databases, and one of these is the China Global Energy Finance Database, CGEF for short. And what we're tracking here is public and publicly guaranteed loans, so lending from China that is going to recipient governments, whether it is a public entity owned by the government or there is a guarantee involved, so for a private or non-majority government-owned entity. And also very important to state that we are tracking China's development finance institutions, China Development Bank and CDB for short, and China Export-Import Bank, Checksum for short, their lending, as these have development as their mandate. So I'm just going to jump right in here with the picture. We observe that there's 367 loans to 68 recipient countries, energy sector. As we're tracking exclusively the energy sector, not just power generation, but other subsectors like transmission, distribution, and so forth. And there's been 209 billion loans committed from CDB and Checksum. The World Bank, during the same period, so until 2023, committed 43 billion. So CDB and Checksum have committed roughly 5 times more in energy lending. However, the World Bank lending seems relatively stable, especially so until 2022, and then in 2023 doubled to around 8 billion, which is roughly 15 times what was committed by China in last year. So now I want to talk a little bit more about the lending from China by energy source. And most of the loans committed, 50% went to oil and gas related projects. Hydropower was this second one with 17%, and then coal with 10%, and nuclear with 4%, and then other renewables, wind and solar and other renewables amounted to 1%. If we go to the next slide here, we can see, however, that there has been a shift in the lending by energy source before the pandemic and post-pandemic. So, if we look at the pie chart on the right, we see that all the lending that has been committed since 2021 has gone to low carbon energy related projects, right? So we do see a shift in the type of lending. However, it is important to note that the scale is not the same because the 2021 and beyond lending is only for projects. So it's not nearly the same as what was being committed previously. Next, I want to just quickly talk about, our database methodology and obviously introduce the new loans from the 2023 update. So, just very quickly, the next thing is, so how did we get here, right? So in terms of our acquisition process for the data, there are three main steps, right? There's the algorithmic track, manual data collection, and finally double verification. So the algorithmic track is we web scrape using the Azure Cognitive Web Service API to identify articles that discuss, China Development Bank by the different keywords that we use. And then we also supplement it through another channel, two other channels actually, the GDELT project news site, as well as the MOFCOM articles. And this provides a little bit more diversity in terms of the language because Azure is really skewed towards English language sources. So this really comes in handy to have a more holistic perspective. Next, we move on to the manual data collection, which is a really, really key part of the process because here we have a source catalog where we look at all of the main different government websites from the different recipient governments and see where they report their loans and debt and other things to then find official sources and company disclosures and so forth to back this information up. And then finally we do a double verification, which is an extremely important part of the process where we make sure that where we strive to have an English non-Chinese language source, official source, as well as a Chinese language source to make sure that we are able to really, provide evidence for the existence of these loans and projects. Next, I'll just like to briefly talk about the 2023 loans that we have identified via this process, and then I will pass it over to Jiaqi to talk about the drivers of this lending that we've observed, right? So there are three main projects, so three projects for a total of $502 million that are all financed by Checksum. And as we've already covered, right, this is non-fossil fuel energy with focus on hydropower and solar. And it's important to note that the average loan amount here is only 167 million, which is significantly below the 574 average loan value that we observed from the loans committed from 2000 to 2022. And this shows that, the lending has really has shifted towards smaller projects. And obviously, with a focus on low carbon energy, and this is in alignment with China's small is beautiful approach to overseas lending and consistent with Xi Jinping's 2021 pledge to support renewable energy in developing countries. Now I'll leave it to Jiaqi to talk about the key drivers of this. Thank you.
Thank you, Diego, for the excellent introduction. So now I'm going to talk about the drivers behind this Chinese cautious return, as Diego just discussed. China, after like a 1 year pause in overseas energy lending in 2022, so 2023 there is like a small return, much smaller compared to previous loans. So one of these key drivers behind it is the South-South collaboration. As China has mobilized over 45 billion for international climate-related finance for the global South from 2013 to 2022, and according to the Chinese official now at COP, they are claiming they have mobilized $24 billion for since 2016 for international climate finance. And this investments in renewable energy is just part of it. Also, in international climate governance realm, China is under international pressures to end coal finance, given coal is the largest emission source of energy. And also, China have been asked by developed countries to provide more financial resource for mitigation and adaptation, considering it has been the largest carbon emitters since 2008. So over the past years, so China has made major policy announcements related to overseas energy finance. So first of all, in 2023 at the BRI Forum, China committed to the Green Investments and Finance Partnership. So initiate this or GIFP. When they initiate this, they claims to support renewable energy across the BRI countries. And also during the forums, Xi Jinping announced there will be 350 billion RMB or 49 billion US dollars financing windows for BRI projects. Many of these will be going to renewables. Also at FOCAC this year, China already committed 30 energy projects in Africa in the next 3 years. And also China established this China Africa Nuclear Energy Forum to encourage exchange of knowledge and encourage knowledge spillover of nuclear energy. So in the future, if we are looking at these policy cues, in the future, we should at least see some more energy lending and into the clean energy sectors, including renewables. So in conclusion, China has shown some dedications to low carbon energy by redirecting its financial resource away from fossil fuel projects. It has been over the past 3 years, any of these loans goes to fossil fuel energy. And China is expected to increase its energy finance in regions like Africa and BRI countries, just given their commitments over the past 2 years. So we'll see, although like this year in 2023, the energy loan is relatively low, but we'll see more coming in the next few years. And even though, lastly, China has made significant shift away from coal and fossil fuels, but the skill of its overseas energy finance is in question. Many of the international financiers are urging China to provide more financial resource, and it will depend on China. We will continue to observe what's China going to do? Is China going to scale up this is energy loans to the global south? And that's all for the presentation. And I will leave it to Diego for demonstration of our new database.
Thank you, Jiaqi. I will now share my screen. I think everyone should be able to see it. So I will now just quickly demo the China Global Energy Finance CGEF database. So as when you go into the website, you're approached by this, you're welcomed by this sort of background information about what we just discussed in our meeting. And yeah, this is actually not this year's update, but you will see it is the same. It is updated, and you just need to refresh the page. But when you go to explore, what it shows you is the map of all the countries that have received this financing from CDB and Checksum, and the amount that has been committed to these countries. And it's really cool. So you can filter, or you can sort of click on the different features here. So you have energy sources, and it'll show you a breakdown of which of the sources, which of the energy sources are receiving more funding. And also you can see the subsectors, right? Whether it's going to exploration, extraction, power generation, and so on. And also the lenders, right? Whether it's CDB, Checksum, or both. And when you click on a specific, and this is being shown by continent, right? But you can also click on for example, CDB lending, and it'll also show you here the evolution over time in this bar graphs here, and also the projects, right? So what are the projects that are receiving these commitments, and you have the breakdown here. You can also find more information specifically about them, right? So who are the borrowers, the lenders, and the energy subsector. You can also filter by year, right? So if you click on 2014, the picture will the map will dynamically update, as well as the graphs and the project lists below. I guess the last thing I would show is the about page here, which would give you more of a background about this database and other databases at the GDP Center, and it will link you to the policy briefs. And in case of questions, you can contact me. My email is provided in this page. And then finally, if you want to download the data, you just fill out this form here, and it will take you to the download link. So that's it from the database demo. Thank you.
Thank you so much for that insightful introduction, Jiaqi and Diego. I'll ask a few rounds of questions for each of you, and then open it up to any questions from the audience. As a reminder to everyone with us today, if you have a question, please feel free to add that question to the Q&A box in your Zoom menu, which for most folks is at the bottom of your screen. And when you do so, please include your name and affiliation so we know who we are addressing. First, I'll ask one question of each of you. I'll start from small things and move towards the big picture. First, Diego, you mentioned right at the beginning of the presentation that we focus on development finance institutions, usually at GCI, and CGEF, this particular database, focuses on PPG lending. I'd love it if you could give a little more information about why we take that approach, why you pursue it from that angle, and what the importance of that particular kind of lending is. And Jiaqi, I wonder if you could help us understand why we've seen such a tremendous decline in the last few years. Why is the size of energy loans so much lower than before? Do you anticipate China scaling up its energy loan sizes again in the future? So let's start with Diego and then pass it to Jiaqi.
Yeah, so thank you so much for the question, Becky. For public and publicly guaranteed loans, I will just define it in a little bit more detail. So there's two types really. So it's public and publicly guaranteed. For public, it's when the lending is going to a national owned entity, right? A public agency. And publicly guaranteed is not necessarily government owned, but there is a guarantee in place. With the former, there is an explicit repayment obligation from the part of the recipient. And then the latter, there's a guarantee in place. So in the case of non-payment, then the government is liable for that repayment. So this is really what captures what the financial responsibilities that recipient governments have for this type of finance. And we track and the reason that we track this is this allows us to be aligned with the World Bank methodology, so we can compare their research with our research and other development finance institutions, because ultimately what we are trying to study is the outcome on development, sustainable development, and be able to have the same starting point is really important for analysis and research. Thank you.
Great, thanks. And Jiaqi?
Yeah, thanks, Becky, for the question. So what we see over the past few years, right? Tremendous declines in the energy loans. It doesn't just happen post-pandemic. Even before the pandemic, the energy loans amount has been dropping from its peak in, if you remember that bar chart. So Chinese energy loans start dropping in 2017, 2018, 2019, 3 consecutive years. So these happens because China are just becoming more risk averse. Instead of investing in large mega level fossil fuel and hydropower, they kind of rolling back, become more cautious about their investments. And then in 2020, of course, the pandemic happened. All of a sudden, Chinese economy is experiencing a hardship, and then its overseas engagements are also declining. So this is a continuation, just being amplified by the pandemic. And of course, at the international level, like more and more international pressure are put on China to stop this fossil fuel intensive energy loans. And we observe a lot of oppositions from local communities to that alarm Chinese loaners about this environmental and social political risk that is sparked by this by mega project. And in terms of the amount of loans in the future, I think what we can, at least in the next few years, we can expect that this loan, the amount will come back, but not as high as before. So just based on what the Chinese government's announcements for FOCAC and policy BRI forum, were expecting some energy loans, which accumulatively is higher than the past 2 years, right? So, but eventually, the future energy loans will depend. The amount of future energy loans will significantly depend on Chinese own economic situation. If the Chinese government can reboot its domestic economy, it will be. I think it will be very difficult to see a huge returns in its overseas lendings. Thank you.
Thanks, Jiaqi. That really brings me to the next question I wanted to ask Diego, actually, which is that you named the presentation, you began by talking about small road, beautiful belt, or small belt, beautiful road. Does this data update give us a better picture of whether China's approach to overseas development finance is more closely aligning with the idea of small and beautiful that we've heard mentioned several times over the last several years. Does this give us confidence that we're shifting into this trend? Do we have enough information to feel that we're moving in that direction? And Jachi, you mentioned both kind of demand factors from developing countries, what they want, as well as supply factors on the Chinese side. I wonder if you could explore a little bit for us what kind of barriers China may face in scaling up its renewable energy finance. You also mentioned new policy commitments to scale this up, pressure from the international community for everyone to scale up climate finance globally. But that's not as simple as simply saying, I would like to spend money on this. So I'd love if you can tell us some about what kind of speed bumps and barriers China may face in trying to expand its participation and contribution in that way. So first, on to you, Diego, to think about small and beautiful. Thanks.
Yeah, thank you, Becky, for the question again. So with small and beautiful, I think it's important to acknowledge like what exactly we mean, right? And I think that Xi Jinping, his commitment in 2022, was when he first mentioned this, was about how the lending would be more like smaller projects, more rapidly deployed, could be more rapidly deployed, and would be focused on environmental and social beneficial outcomes, right? So that's what is really meant by small and beautiful. And what we see with this new database update for CGEF is that indeed all of the lending is of smaller projects that are focusing on low carbon. There's 2 hydropower projects and 1 solar power generation project in Burkina Faso, and that shows that indeed that this trend has arrived. However, it is important to acknowledge that it is of smaller scale, right? And that sort of alludes to what Jachi will now talk about. Thank you.
Jachi, you're muted.
My apologies. So thank you, Becky. I think there are 2 folds to your question, 2 angles. We can analyze these questions from 2 angles. First, domestically, Chinese domestic situation matters. So as we can see over the past, like we can read over the news of the past few years, like after the pandemic, China is having economic trouble, and as government's income actually tax income actually decreased, so that actually limits Chinese financial capabilities for its development banks. But on the other hand, China also is also facing this so-called overcapacity issues. Although whether there is truly overcapacity or not is still up to debate, but make no mistake, China is making a lot of renewable energy products. Right? And they are facing severe competition domestically, and the price of solar and wind are keep dropping in domestic markets. So one way to make more profit is for these investors, to these project developers to go overseas. And Chinese policy bank can create this demand for them in a lot of global South developing countries. Right? When this financial resource is available for some of these developing countries, they will have to find a way to buy solar panels, wind turbines, wind engines, right? So the cheapest resource they can go to is the Chinese source. And internationally, of course, there are drive hurdles for that as well. First of all, there are in many developing countries, the electricity system itself is not very ready for a large upscale of renewables. especially considering in Africa region, the electricity grids in many of these countries are actually quite weak. They are very unlikely to be able to absorb all these intermittencies of renewable energies. So that is a technology hurdle. So what I will expect to see is that before truly scaling up renewable energy, is to first have international investors, including Chinese investors, to invest in grid system of these developing countries. So with a stronger, better grid, this renewable energy can be fully utilized. Thank you.
Thanks. For my next round of questions, I'd like to broaden our perspective a little bit. I did promise to go from small to big in the direction of these questions. For Diego, thinking about the world of databases that CGEF lives in, the ecosystem of databases that exist tracking energy finance in general, I wonder if you can explain to us how CGEF exists in the context of this ecosystem. How does CGF compare to other databases that also consider this kind of finance globally? And Jiaqi, as we expand our view to consider global prospects, I wonder if you could discuss a little bit something you mentioned in the presentation about future shifts. We've definitely seen a decline in fossil fuel lending, as you mentioned, as one part of Xi Jinping's famous commitment. The other part is scaling up renewable energy. Are we effectively just seeing a temporary decline in fossil fuel investment, and so the other sectors are rising as percentages? Or are we actually beginning to see an increase in renewable energy in absolute terms? In other words, are we seeing both halves of this commitment? Or are we just seeing the lack of fossil fuel participation leaving whatever was left, which is the lower carbon sectors? Thanks. So Diego, over to you to think about the ecosystem of databases.
Right. So thank you. For the ecosystem of Chinese lending to energy finance, the main ones are, the Boston University hosts two actually related to this. So it's not just this one that we're talking about today, CGEF, but we also have a China Global Power Database, which is focusing on power generation. And then we also work together with the World Resources Institute for a third database called COFI, China Overseas Finance Inventory. And so, these three are focusing on energy finance, and CGF is unique in a way that it has a very wide, broad coverage, because it's not just power generation, but all kinds of energy lending for other subsectors. Whereas, CGP and COFI are focusing on power generation exclusively, right? So I think that's really what's unique about CGEF. And all of these subsectors are really important for all of the things that Jiaqi is mentioning, right? In terms of infrastructure and grid development, and all of these things are monumental for actually deploying renewable energy. So I think that this sort of broader perspective is really important for CGEF. But I think that researchers that are really interested in, for instance, looking at the equity side of things, right? Because we as CGF are only looking at debt. I think if you're more interested in equity perspective, CGP and COFI are looking at foreign direct investment. CGP does it more at the unit level, and COFI looks at things from a project level. So it depends really on the researcher and the policymaker, what kind of granularity they're really looking for in deciding which database they want to focus on.
Thanks, Diego. That was very helpful and detailed. Jiaqi, over to you to consider these two halves of Xi Jinping's commitment.
Yeah, I think you're absolutely right. So renewable or low carbon energy pop up over the past years is because China cut back all these fossil fuel lendings, right? just by looking at the absolute amounts like into solar, wind, and hydro, yes, it's nothing compared to like the second half of the 2010s, right? And but in the future, I would expect that the fossil fuel landings is might come back, but I really doubt that because now we are looking at the overseas landing picture. Chinese, there is only one project that is hanging in like hanging there is the East Africa oil pipeline. So Chinese financiers, CDB Checksums, has been talking about financing that project, and but there is no concrete information about whether they will do it or not. So if they do it, they will be under a lot of criticism since this is a very high profile and attract a lot of international attention and a lot of criticisms. So as like China becoming more cautious and more risk averse, I doubt they will really like go into that rabbit hole. But in terms of like renewable boosting in the future, I would say there is a reason why these kind of landings are actually smaller than before. Is because that renewable energy, they are usually come in smaller sizes. Wind farms and solar farms, they are actually smaller than usually they are smaller than fossil fuel projects. So that's why sometimes we see like the amount of those loans are quite small. And in terms of hydropower, as I mentioned before, so hydro landing is also cutting back in terms both in terms of the amount and the sizes. So and I don't see a reason why they will come back like before, because well, as I mentioned, there are a lot of pushbacks from environmental groups and local communities since hydropower project has huge environmental impacts. Although there are a low carbon source, but very large environmental impact.
Well, Jesse, I'm so glad that you pivoted towards thinking about hydropower in particular, because it gives me a great segue to consider the questions that have come in our Q&A box. As a reminder to everyone who's with us today, please feel free to contribute your questions, any questions you may have, to the Q&A box in your Zoom menu, which for most of us is at the bottom of the screen. And do remember that this is being live streamed when you do that. And also please include your name and affiliation so our panelists know who they're addressing. So one great thing about your pivoting to hydropower is that one of our first questions is particularly about hydropower. And this question comes from Julie Radomski, who's a postdoctoral fellow here at the GDP Center, asking, looking forward to what small and beautiful renewable energy projects might look like, do we anticipate hydro, which is, of course, an older technology from solar and wind? Hydropower projects have been around for centuries, or at least a century in large scale. So do you anticipate hydro, large hydro, small hydro continuing to be the majority of the renewable energy portfolio moving forward? And if so, what kind of climate as well as local, environmental, and social implications might that have? Another question, which is perhaps more tilted for Diego, and I apologize in advance for my inability to pronounce names if I get them wrong, but a new question coming in on the Q&A box involve upstream oil, gas, and other kinds of lending. So Sasire Napo, who is from Togo, a PhD candidate in economics, thank you for joining us, asks, does this database also include lendings for upstream fuels for energy like oil and gas? And we have another question about oil and gas also. This is from Mohammed Mansour, who's an oil and gas finance expert, who asks, what about ongoing, previously documented oil and gas loans, particularly in Africa, which may still be in the exploration or development stages and may not be able to come online without additional finance. In other words, any extraction project, whether it's mining, oil, gas, usually goes through several phases before it's at production, right? And so early Chinese finance in these stages may have gotten a project to the development stage, but without additional finance, it might be put on hold, might be difficult to pay back that initial exploration cost that has already been spent. So where does this leave those oil and gas projects that may have already been started? So Diego, if I'd like to start with you, please, to think about the role of oil and gas in the database, and then perhaps turn it to Jachi to consider the role of hydro compared to other kinds of renewables, unless you'd like to also tackle that, Diego. And then ask perhaps if either of you have an idea about what does this do about ongoing oil and gas projects that may have been started, but now may be halfway to completion. Thanks. Over to you, Diego, to get us started.
Yeah, thanks for the questions. I would just provide my impression, but feel free to add. So for the question about the tracking, right? So of course, yeah, we do track the Chinese lending to upstream as well. So for upstream related projects as well, and this can be found if you go on the database. There's a column called subsector, and you can see all the different subsectors that are being tracked, right? So it's not just power generation, but also transmission and distribution, as well as exploration and extraction and other petrochemicals and other subsectors. You can see the different options there, and those are tagged, according to what the purpose is for. So yeah, we do track that information. For the question regarding the hydro power projects, I noticed that this time around, like the hydropower project that was financed in Madagascar was of $240 million, which is relatively small. So I think if we look at in relative to the amount that is usually committed for hydropower, looking at 2022 and before, and I think that if this year is or 2023, I should say, is indicative, then I think going forward, then that the focus will be on smaller scale hydropower projects. But obviously, I'll leave it to Jachi to expand. And for the point about the oil and gas projects, I believe, I think this will be really case by case basis. Jachi just alluded to the crude oil pipeline, that whether the CDB and Checksum would want to take that up, and it could draw this criticism and attention, right, media attention, that probably would not be conducive to the message that China is actually shifting, portraying this message, right, shifting to low carbon energy. So I would say that but however, you do see that some projects are kept alive, right, and have gotten more financing, and I think that it does depend on the country. So like I said, I think it'll be more of a case by case basis.
Thank you, Diego. So I think there first of all, in terms of the hydropower projects, I think many of these cases are are smaller than before, and concentrated in Africa. So I think in the future, so this kind of smaller project will have more of these smaller projects come online. Not all of them like are this old technology, like century-long technology hydro project. There are some hydro power are for energy storage, right? So build a reservoir and alongside a large renewable project. And since hydropower is much more stable, then it's controllable comparing to wind and solar, so it will be serve as a great resource for energy storage. And this is what China has been doing domestically in the past few years. So building up a lot of this energy storage hydro projects, since like hydro, after all, is the cheapest energy resource available. So I would expect if China is going to take up the skills of renewable investment somehow, smaller hydro will likely to come online as well. And comparing to the previous large environmental large project that have lots of environmental impact, these smaller smaller hydro project for energy storage purpose are usually has less environmental consequences. In terms of the energy ongoing project energy loans that lack fundings. I think in addition to the Chinese resource, many of these countries are also seeking for financiers in other countries, in Europe, in America. So it will, even if China is not willing to provide continuous fundings for some of these projects, I think many commercial banks are also going to step in. I'm not saying that they're only dependent on China, but they are these countries can actually explore more energy financial resources somewhere else. But since there is a huge divestment movement for fossil fuel projects, they will have some hard time finding enough enough financial resource. But well, this is a big world. There's always this money is always available somewhere else if the project itself is profitable enough.
Thanks. We have time for one more round of questions. And so I'd like to ask each of you to really think about the big picture moving forward. So as we speak, representatives from around the world have gathered in Baku for COP29, for the climate COP. And this is really discussed as the finance COP. This is the year to talk about the really focus on garnering, mobilizing financial resources to be able to make global energy transition happen. So I'd like to ask each of you to consider for a moment how what we've learned today, how that affects your watching the COP. How does this color what you anticipate or hope comes out of COP and the roles that Chinese development finance can play a meaningful, constructive role in specifically being a development finance partnership across the global south to help decarbonize the world? I don't know which of you would like to take that first, but please feel free to jump in.
Yeah, I'm happy to jump in. So this year at COP, we're hearing about very intensive debates on energy, especially about Chinese role on this. One very controversial proposal, of course, controversial from the Chinese side, is that some European countries and Canada propose a cutoff line for providing energy energy finance, climate finance. Of that cutoff line is 22,000 per capita income USD. So it's a cutoff point that deliberately designed for China, according to many China observers at COP, because it is a cutoff point where in BRIC countries, Brazil, Russia, China, South Africa, and India. So only China crossed that bar. So all other four countries average income are actually below that bar. So it's specifically designed for China to ask for more financial resource from China. I don't see why Chinese negotiators going to accept that. So there will be a strong pushback from the Chinese side, right, on this proposal. But it doesn't mean that China won't provide climate finance in the future. So one message leaking from COP is that China is calculating their own contributions, climate contributions, like the $24.5 billion from 2016 to 2023 that I mentioned before. That's the Chinese number. And also our colleague at WRI also have a number for about like 40,000, like $49 billion in terms of climate finance over the past 10 years, right? So China is not going to cut off all of that. Right? So this demonstrating that climate finance contribution in the past is signaling that they are willing to do so in the future. Otherwise, they will be just receiving criticisms about why are you cutting back your financial investments in the climate, and given that you are the largest emitter in the world, right? Another factor we need to consider is that many observers point out, including U.S. Chief Negotiator John Podesta has pointed out, Chinese emissions might have peaked in 2024, or is going to peak in the next 1 to 2 years. So that will have a tremendous implications for Chinese domestic energy policy and its overseas energy policy. If China, given that achieved this Paris climate pledge 6 years ahead, that means China has extra strength in this field. It will only make sense for China to utilize this resource and technology and provide it for the global south to achieve their NDCs early. Right.
Thanks, Jiechi. Diego, do you have any closing thoughts about how this data helps us think about the future?
Yeah, I think that Jiechi really covered everything, right? So thank you so much, Jiechi, for that. I don't really have much that I would add except to say that, there's clearly a need for more financing. And I think at the COP, we're going to see probably some finger pointing, right? And different countries and institutions saying that more can be done. But I think that in the case of China, they seem like they're not wanting to commit to something super like set in stone about what they're able to provide. But it doesn't mean that they are not participating in elevating the amount of climate finance. And I think Jiechi and all of the points that he made about how China is really well positioned to do more here, especially in terms of the technology prowess that it has. I really hope that all the countries can kind of just come together and really agree on how they can channel this funding to improve sustainable outcomes in developing countries.
Well, a sincere thank you to Jiechi Lu and Diego Morro for sharing their thoughts with us today. And thank you to our audience for joining us. If you'd like to receive updates for future events and research from the Global China Initiative at the GDP Center, you can subscribe to receive newsletters at bu.edu/GDP. Thanks again, everyone.